Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Thursday, the 22nd of August. I'm Daniel Lam, your host for the podcast. The month of August has been one of extreme volatility, and we've been focusing upon the short-term moves. So today, for a change, I would like to look at the longer-term earnings trends of DMs versus EMs. Why? Well, some clients have been asking that EMs have been relatively resilient in this sell-off compared to the DMs. So is it time to look at EMs again? Well, the fact is that EM equities have dramatically underperformed their US and Eurozone peers in US dollar terms over the last 15 years. EM and EM Asian companies were not able to grow their EPS during this period. So since 2010, US EPS have grown nearly 200% in US dollar terms, while the EM counterparts have remained flat. On an annual rate of change basis, EM EPS have sharply improved this year from double-digit contraction levels. So is this sustainable? Well, the recovery was sharp, but year-on-year EM EPS growth remains flat. The fundamental backdrop remains tough. EM corporate profits are highly sensitive to Chinese imports, yet Chinese demand remains lackluster, and it is unlikely to meaningfully improve in the coming months. The base case is that the Chinese authorities are continuing to carry out piecemeal, but not massive stimulus. The US has been a major source of global demand, but its macro data is pointing towards a slowdown. In terms of policies, in aggregate, EM's money supply is narrowing, and that acts against its EPS growth. Well, it is true that EM valuation is cheap compared to US equities, but they're not so cheap versus the European ones. Finally, in terms of composition, EM equities lack the representation in a key growth area in AI. So on corrections, they are unlikely to be the quote-unquote first port of call from investors, and they're more likely to be buying into US and Japanese equities on dips. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.